براحتك، انت عاوزني اعمل ايه بالظبط لما تفتح؟ قشطة ماشي، مفيش مشكلة. خلاص، هتعمل شير سكرين من الشاشة اللي انا عليها في الوقت الحالي؟ اصل لو كده ممكن اشيل دوت كده. ماشي. انا قلت ابسطها لك، عملت لها مينيمايز تحت، شلت التاب من هنا و جو اهيد. alright. Welcome back. Market is about to open in 9 minutes. Here's what's going on right now. We can see that yesterday the market was consolidating, which was to be expected. There was no news, um, not much move. It just consolidated, and then by the end of the day, um, after during PM session, after the lunch hours, it started breaking out of the consolidation and buying up into this void that we had left during London AM session. We continued up, consolidated some more during Asian, and finally last night we went down, swept some sell side liquidity, and then market structure shifted up. Same thing happened this morning, pre-market, pre New York session. We swept sell side, another market structure shift up here, and a retracement, continuation of the trend upwards. As of right now on the big time frames, it looks like we're bullish, but we still have to consider that we might be delivering from this inverse fair value gap right here, this bearish fair value gap right here, and this bearish fair value gap right here. So we could still sell down um, some more, either as a reversal or as a retracement, especially after those few days of run-ups that we had, and we could easily be due for retracement to at least this fair value gap or this order block. So we have room to go down. As of right now, it looks like it delivered from this bullish fair value gap and it's going up and it's about to market structure shift. I would wait until 9 o'clock to see what the next 4 hour candle does. Depending on the power of three of that candle, we're gonna have a clear idea of what the market wants to do, clear idea of the direction of the next 4 hour candle. But as of right now, we don't have much info to go off of. Um, there's no news today, so it might end up being a slow, choppy consolidation day. In that case, I would hold off on trades and take the day off instead of getting chopped up in consolidation. But in the case that it wants to give an expansion move, we can find the right idea by looking at the next 4 hour candle and jumping into a trade. So yeah, that's that for now. Uh, see what else we could find. Oh yeah, obviously here we had relatively equal highs on Nasdaq. This was swept this morning at 4 a.m. Um, after we grabbed sell side, we went up and grabbed buy side. I thought it was gonna continue down from there, but even after we swept these relatively equal highs and rejected off of this rejection block, I wasn't satisfied with that. It still looked like a consolidation to me that we need to manipulate above before going down, manipulate above the whole consolidation range, including this high. And it just did that. And we swept up here. If this hourly candle decides to reverse after market open, that would give me a clear sell idea because if you respect this rejection block once more after sweeping, we might start selling from the first macro after market open. Also, we can see here the SMT diversion. In this case, Nasdaq caught up and made a higher high after S&P had left a diversion up here and here. So a diversion was already given on the big time frames. It's probably more clear on a bigger one as well, but yeah, I would wait for a smart money reversal within macro timing um, to take a sell. If I want to take a buy, I would wait for a retracement and then a buy from there. But I don't think in this case, I really don't think it's going to give any buys because this should be the manipulation leg up on top of this consolidation. It should be just a sweep, and we should see market structure shifting down after the manipulation is done. On the small time frames, it's going to look a little bit like uh, this. Let's see if I can draw it a little bit something like this, and then we're gonna market structure shift under this low, and then we're gonna go up, retrace somewhere here, and then continue down and make lower lows. That's what it should look like if we are bearish. If we're not bearish, then we're obviously gonna continue up until eventually we get to a point where we're still gonna sell a little bit as a retracement, and then we can take a buy. A good candidate for a buy, if one wanted to take a buy, would be this imbalance right here with the void inside it, probably somewhere in there. Let me, let me measure it. Well, I can't really measure it right now. I can't measure the equilibrium of this swing because we're swing the swing is still not complete. We're still swinging higher up. Um, but let's say that as of right now, this is the highest point of the swing. If this is the equilibrium, we would have to cross the 50% line to get into a discount area for us to take a buy. And the closest PDA to that would be like this open range order block right here uh, with a sweep of this liquidity, this low, get swept, we tap this order block and take a buy. Or if the slowdown of the market doesn't happen right here, then we would want to see a tap of this fair value gap and fill of this void or a revisit of this void, and from here we could also consider buys. If it doesn't give this, it's gonna give I think it might really give both. One of them, it's not gonna respect it as a whole, um, long term throughout the day, it's not gonna get respected. The bias is not gonna be that one, but both ideas should be tapped. The sell from up here to down here should happen, and then the buy from here to up here, it's gonna happen if we're bullish. If we're not, obviously we're gonna continue down and market structure shift uh, beneath the whole thing, and we're not gonna respect the discount. It looks like it moved a little bit, so there you go. This is that as of right now. Just don't like the idea of buying. I feel like it's in a big premium. It would be it wouldn't be good to buy uh up here. It's too far up in my opinion, especially because this looks a lot like consolidation, manipulation, and distribution waiting to happen. Um, for that reason, I'm really not considering any buys as of right now. It could turn out to be bullish, but as of right now, even if it's bullish, this is not a good point to buy from. Only after a retracement I would consider to buy. If there's no retracement, then I wouldn't even um, consider it, to be honest. As of right now, it's since market opened, it's been squeezing up. Could very well be bullish. But like I said, we need some sort of retracement for us to take the bullish idea, even if it is bullish, even if we identify the trend, we still have to wait for a good entry point for the idea to work out or play out. Because if we don't, so then even if the idea is correct, we're still gonna get stopped out if the entry is not accurate.
Okay, I'm back, buddy.
What's up, bro?
How are you doing this morning?
Good, good. What about you?
I'm good.
Welcome back.
Just a rough morning, as you know.
Yeah,
So how is the 8:30 doing? How's market open? Just pumping up.
yeah, just been pumping pretty much. It wicked down into an order block. The 1 minute candle market open at 8:30. It wicked down into an order block and a fair value gap, and it kind of tapped the open range, filled the void, and that was right there, and then took off. On the 30-second, the void is more visible.
Uh huh.
Once it filled the void and it tapped the order block open range, it just started pumping up. And I was just saying right now that, in my opinion, it's one of two things. Either we take a sell from up there if we consider this the manipulation leg up, because on the hourly it looks like it consolidated, and this could very well be the manipulation leg up. It's either
But
we take a sell from up there, somewhere there within smart money with smart money reversal confluences and within a reversal macro timing, or if we don't like the sell idea and we like the buy idea more, we can wait for the 50% equilibrium of this swing to be given for us to be able to buy in a discount area. But as of right now, either way, a buy would be wrong because we're in, in a super premium right now, and sell wouldn't be good because there's no confluence for it yet. You know?
okay. We are in a bearish IFG from the 1 hour, but I don't expect us to go like if we go down, it would be like just a retracement. I don't think it would be
Yeah,
just like collapse because I feel like on the 1 hour, this is just the buy side of the curve, and we have not completed the market maker buy model. So I feel like there's a lot of buy side liquidity that need to be taken first.
yeah. I was talking about the same exact fair value gap and how I think that some sort of reaction is going to be given from that area. And even if we are bullish, we're still going to sell off a little bit because we've been on an extended bull run for 3, 4 days in a row, leaving obviously a bunch of liquidity to be swept, a bunch of imbalances to be filled. So for that reason, I think that it might very well give some sort of reaction from that fair value gap that we're currently inside of, and give some selling to go grab some consolidation and go into one of the imbalances left during this bull run. Especially because if we like do so, we would see that like on the 4 hour chart, the closest point to give a discount within equilibrium of this swing would be like uh it lines up perfectly. Right now it's lining up perfectly with the fair value gap, huge one, like $400 down from where we're currently at. So yeah, it just makes sense to me that it's so much in premium that somewhere up there it's gonna end the swing high and start, retracing.
Yeah. Um, I feel like I feel like the price action might be a little bit trash today, just because two reason,
Yeah.
and not sure if you know those two reasons or not. Well, you will. I'm pretty sure you know one of them, which is no news. Second
Yep.
one is I believe ICT is live.
Again,
I believe so. One second. Let me see something.
we can check.
Yeah,
It's
I'm
crazy.
checking.
I thought it was only last week. He did like 2 or 3
Oh,
lives
okay.
last week.
So yeah, yeah. My mistake. I think no, he's not live.
Okay,
But
that's a good thing.
I mean, like, man, like when he goes
That
live, I don't know, for some reason the
that would
price
make it
action goes
more.
trash.
Yeah, that would make it a lot harder. Yeah, for some reason, I don't know why. I thought that the people that were saying that in his comments were just joking, some sort of inside joke or something, but it's actually real. Like last time we traded, w- and his live was he had a live. His live was on while we were taking a trade. The market was super unpredictable. It would switch from taking buy side to sell side, and then buy side to sell side again over and over again, without like reversing where it would make sense for it to reverse. So
So
it was just very unpredictable.
that 1 minute effigy is holding um effigy to the upside.
Yeah, it's going up right now. It created a small 1 minute bearish fair value gap. It went up right now and it tested it, and that one is holding as well. So I would just wait for it to break one of the twos for us to get an idea of where it's going to continue. In my opinion, it's going to disrespect the bullish one and probably market structure shift here somewhere here, and then start giving the bear run that I was talking about to at least the fib level,
Yeah.
or not the fib level, the equilibrium level that I was showing.
Yeah, I feel like
Uh,
it's gonna start from here after we inverse this fair value gap.
yep,
Okay, we did not violated it, but most likely we're going to violate it with the next
yeah.
candle, just because we're like that so much in deep in that fair value gap and it's not holding.
Yeah, I'm also trying to keep an eye on S&P for any SMT diversions up there or anything like that to kind of uh, get an early signal of the beginning of the bearish run. If we do end up having a bearish run from the area where we're currently in.
We got a lot of liquidity pool down there, just
Oh yeah,
a
for
lot
sure.
of stacked equal lows and stuff.
Yeah, consolidation areas, voids, you
So
name it. There's
yeah,
everything down there.
so now. we just violated that bullish fair value gap. That would be a trade idea right there. Yeah.
especially because it's also giving an SMT diversion right now. The S&P
Yep.
is,
It's speeding up.
yeah, the S&P just created a higher high uh, on the small time frames, 30 seconds and 1 minute, when Nasdaq is actually behind and it's making a lower low. So if the slow pair, you already know this. If you if the slow pair sweeps, that's probably a start of a move.
But this also can be a just a manipulation, and it might not be a real good setup, and it might fail just because we're like so high up in premium. um and
It,
it might just like continue delivering to the upside and taking more buy side liquidity instead of just like consolidating or like taking
yeah,
yeah.
in my opinion, I mean, as of right now, there's nothing really to look at. There, there's not much information to look at to consider any sales from here. So, in my opinion, it is gonna start giving some sales, but maybe not, probably not from here, especially because we're still not in that macro timing after the the new 4 hour cap candle opens. It is clear to me though that it's leaning more towards going down. And if this is like you said, even if it is a retracement, like you said, this retracement is going to be super deep. It's going to give us enough for sure for enough room for sure for a trade for a take profit. It's going to start breaking down now that it's swept up. The weird thing is that both after there was an SMT diversion, it was taken out and both went up and swept it once more, both on Nasdaq and S&P, and now it's heading for the low. The fair value gap that we were talking about, though, it has been disrespected with this last candle, the 1 minute candle previous to this one. Uh, we're gonna see if we market structure shift. I wouldn't consider anything anyways before the market structure shift and the retracement after the market structure shift. So either way, a couple of the points that I want to be broken past are um, haven't still been approached yet. So yeah,
Oh, ho, 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 ho. Man. All right. If we close above this same FEG again, it's going to be a consolidation price action, and we gonna be stuck in consolidation for a while because I've been there multiple times.
yeah,
So this is one thing I kind of like realize what I do when I sometimes blow up accounts or over leverage.
yeah,
I get so mixed up. I get in one idea. We violate this bullish fair value gap. I short. It goes too high up to retrace. I take the loss, and then it goes down again. I jump in a short.
yeah,
It tried to violate the FEG to the it violated bearish FEG, so I try to long, and I just keep being stuck in one range of consolidation, and I keep jumping in, buy and sell and buy, and that's where I blow my accounts.
yeah. That's exactly why I don't take trades on confirmation and
Validation,
validation.
and
It's
that's
only for me. I only take trades on confirmation. To be honest, I disregard invalidation completely.
yeah. Oh, So you see now that bullish effigy, we just violated it, and then we kind of like respect it. I mean, this is to me now. This is consolidation. This is one way to tell
Yeah,
that this is consolidation price action, and bad PA altogether.
yeah, that's right. Nothing is happening yet, and I don't expect anything to happen anytime soon, to be honest. Um, Not before 9:10, 9:15 ish. And that's when I'm really looking. I'm really interested into seeing where the 4 hour candle wick ends up being and where the body of the candle starts. Prior to that, if I don't have a clear direction, then I don't jump in anything. Because if the setup is not super good before 9 o'clock, most likely going to be swept. At times, the 9 o'clock candle doesn't really leave a long wick, and that's if we expended already from 8:30 to 9 o'clock. To during those 30 minutes, we expended a lot. In that case, the 9 o'clock wick is nothing but a small retracement, and then we continue in whatever direction we're going. And for that reason, during those,
Okay, so I
instances, we
want to
can,
show
yeah,
you and demonstrate for you like a couple plays here that I would absolutely would have taken, like if I was like trading alone, but I'm kind of like grown out of it. So if you look at my screen, uh this would be the two plays that I would get in, and I'm pretty sure I would get stopped. I already got stopped out in the first one. The second one, I'm pretty sure I would getting stopped out in the second one as well, just because we entered the consolidation here.
yeah. When you try to guess the way it's gonna exit consolidation, it always turns out to be wrong. And that's how that works. Yeah. I mean, in this case, it might actually, I mean, if it wants to, okay, and this is, oh, this might actually get hit. Something is developing between the S&P and the Nasdaq, though. Some sort of SMT diversion is developing right there. I don't think we're gonna hold that. The way it looks right now, it looks like they're both gonna go up there and smash the high, but yeah,
I
we're
don't
gonna
think we're gonna hit the
see.
high. I think we're gonna keep on going sideways.
Yeah, we might reject off of the rejection block
Yeah,
and continue sideways, but
I think we're just going to reject it for now, but we'll absolutely hit it back again. It's just trapping a lot of short and buy positions. That's my opinion, and from my experience, what I get caught up in too many times and blow too many accounts.
yeah. Yeah, that's what the consolidation is really designed for. It just engineers liquidity in it. Uh, um, it just traps buyers and sellers and stops out both because it's not the right place to really get into a trade. Even if the idea is correct, it's the entry is most likely going to be swept before the move takes place. So, yeah,
Okay, this is
they both
exactly what I
rejected.
expected. I did not trade anything, but this is just what I've seen so many times
Yeah,
from.
it plays out a lot.
Yes. Like
Yeah,
maybe by
I
that time
think
also, even if I'm in it, I would probably like maybe put my stop loss break even. I would have gotten stopped out break
stopped
even
out
for
break
nothing,
even right there.
and
Yeah,
just getting myself into losing trades and like foam, like not foam with trades, but irrelevant trades like this fair value gap. We
yeah,
closed below it. We disregarded it, and now we're closed above it again. Those are the two FOMO trades that I would like before I would get
yeah,
myself
because
into,
they,
and both
yeah,
of them got smashed stop loss. Smashed the
yeah,
stop loss.
because they are taking into consideration both confirmation and invalidation, and in this case, it's not good to do so because during consolidation, you're gonna see a lot of confirmation and both confirmation and invalidation that are just pointless, are useless. They're just there inside of a consolidation.
and
So, like
and
for
I'll tell
example, for
you,
people that
yeah, and I'll tell you something else. Just while we're on the same topic of consolidation, this bearish
yeah,
fair value gap, if we close above it right now, it wouldn't be relevant just because we're back to that consolidation area, and that's what I learned from my experience, like a lot. If we close back on above this bearish FEG and you want to long this that setup, it most likely going to fail because you're going back to that consolidation area, that same range of like from that high to maybe like that low. You're in the same consolidation range. It wouldn't make sense to long or short from this uh like from this area or from this range. What I would be interested in, maybe like push down a little bit further and then create a structure down there from like an FEG or like creating a bearish fair value gap, and then maybe get a because like now we got a sweep. Like if you see that liquidity pool that I marked before, we just swept it. So now it would make sense to maybe get a long setup just after this sweep, you know?
yeah. In my opinion, I'm a little bit more bearish, so I'm a little bit biased. But I think this is not a sweep. This is a move. If you switch to the hourly candle, it did exactly what I was talking about earlier on the stream. As soon as the stream opened at the very beginning when I was analyzing the big time frames, if you switch on the hourly for a second, you're gonna see that the rejection block that I had marked at the beginning of this stream
Yeah.
was the place where we're rejecting from. You can see how long that wick is. It really left a huge wick, and it's just rejecting to market structure shift on the hourly above the high of the rejection block.
Yeah,
And
I
that's
do agree
something
with
that
you.
yeah, and that's something that to me looks like clear manipulation up for a distribution down. The distribution down does not have to be the direct again, it doesn't have to be the direction that we're gonna go in long term for the rest of the week or anything like that. It's just a move that I am confident that has to take place whether we're bullish or bearish because we did leave a lot of imbalances and voids in the last 3 days of price action the last 3 days of the market being open.
Yeah.
Besides weekend and stuff that we had yesterday, we had I think the bull run started from Wednesday, I believe, of last week. So Wednesday, Thursday, and Friday, uh, we had huge displacements up that caused a lot of imbalances and voids to be left. And there's a lot of consolidations that look a lot like the one that you marked with the blue line underneath. There's a lot of consolidations like those on the chart on the big time frames that um, are most likely going to be swept, that we need to sweep. So for that reason, I was saying earlier that on the hourly we can see a clear consolidation uh, on the hourly. It's a easy to spot consolidation pattern, and then we see a long candle manipulation that ends up being a huge wick, right? And then now we should see some sort of extension to the downside to sweep more liquidity. In this case, I'm not going to call it expansion. It's just an extension down to sweep more liquidity because we don't know yet if it's going to turn bearish after this or not.
I
We
don't
aren't,
think
yeah,
we're ready to take any long setup now. And also the bearish setups are not that good. Uh, and
yeah,
the bearish setups, we did not sweep anything from the buy side. After like with this structure that we just made. Um, and with the long setup, as I said, if we inverse this bearish fair value gap, that means we're going back to that same range. I want it to be a little bit lower.
yeah. On the small time frame, not with that structure, we didn't sweep anything. But that's the thing. Sometimes I like to go back on big time frames to kind of cancel all the noise and look at what's really happening on the big time frame. So yes, with this leg down, we didn't really do much of strong. Um, we didn't do much as far as creating strong confluences for us to take a sell from there on the small time frame. But on the big time frame, we did leave a clear manipulation leg up. Obviously, if we reject the rejection block, as of right now, we're above the rejection block line that I would like to see it reject off of on the hourly. And for that reason, yeah, I'm I agree with you. I think that yeah, buys are definitely not a good idea from here. We're in a super premium. Sells are not a good idea from here because there's not a clear confluence yet or a clear point of interest to take a sell off of.
Yeah,
Um, for that reason, either way, I would sit out until like I said, 9:15 maybe. 9:10, 9:15 within this macro that we're currently in from 8:50 to 9:10 to kind of figure out where the new candle is gonna wick and what direction it's gonna take and all of that stuff. And then from there, I could actually consider selling after I see the power of three of the candle. What I would like to see happening now is a speed up from that fair value gap 50% that you have drawn on your chart on the 1 minute and seeing it cross back the line of the rejection block that I have drawn on the hourly before 9 o'clock.
I would really love
So
for this bearish fair value gap to push the price lower and sweep that one low that it made, and then create from there down there in the 185 area and the 180 area, create a
a clear
bearish,
market stri
yeah, create a,
market structure shift, yeah.
exactly, and create like a 22 ICT models again here, and then take off and destroy that to the buy side. I would probably long that. If if not, then I don't think a long makes sense in this area right here.
Yeah, we're currently right there at the rejection block area that I was talking about, and it's actually speeding up to the downside. So that shows me 3 minutes before 9 o'clock hits, 3 minutes before the hourly candle closes. So that shows me a clear intention of price wanting to reject that rejection block. And for that reason, I think, yeah, that the manipulation just took place, and now we're exiting the manipulation, going back into the consolidation area, and from the consolidation area, we're gonna break out of it to the downside this time. We're gonna completely disregard the move up because that was, just a wick on the hourly. Really looks like a lot of, market structure shifts, breaks structure on the small time frames to the upside, and it looks like a bull run and all of that. But if you cancel out the noise and you really look at what's going on on the big time frames, the bigger picture is uh, quite simple. There's a clear 1 hour consolidation pattern. There's a clear, huge wick manipulation to the upside. The hourly candle was super green, and now it's red, and it's under the rejection block that I was interested in. So that to me is a clear manipulation, and now we're just waiting for this hourly candle to close um, for us to start finding maybe sales within the power of three of the 4 hour candle from 9 o'clock. And that would be also great because of the fact that it would be, um, within the the macro as well. So yeah. Also, another reason why it's actually good to sell up there is because it's above all true opens. So if you look at all the true opens that we have on the chart, that's we're literally above all true opens. And for
Yeah,
that reason, I think that's another confluence as well that we manipulated up above the consolidation on the hourly, obviously, but we also manipulated up above all true opens. I just really want to see the rejection block get respected before the candle close, and then we can go from there. There's literally 5 seconds, I think, for the candle to close. It's about to close now. Yep. Okay. Candle just closed the rejected off of the rejection block. What I expect from the next candle is to kind of have a power of three above the rejection block as well. Leave a wick there and then start becoming red after that. So yes, this is the point where I would start looking into sells within this reversal macro. In this case, because it did expansion already before the 4 o'clock open, I think the wick is not going to be very long for this one, to be honest. It just, if you go on the 4 hour, there was uh, relative equal highs on the 4 hour right there that were swept uh, with the manipulation candle. The 4 hour candle went above it, and 4 hour candle that we're currently in, the wick went above those relatively equal highs that we left previously, and it just wicked in there, and now it's turning red. So I think already from here, the power of three could be very well be done. In this case, the power of three is not very long because it only manipulated up $8 or eight handles in this case. So the 4 hour candle didn't leave so much of a wick in this case because of this specific scenario doesn't need a huge power of three to the upside because we already swept what we need to be what needed to be swept, and we already delivered efficiently even to the fair value gap that we left, uh, which is the body of the candle at 849. That 1 minute fair value gap that we left, we retraced back to um, 50% exactly, and yeah, I think it just efficiently delivered to everything that needed to be delivered to, and yeah, we should start getting some sales from here.
Yeah, I do agree with you, but I feel like I don't know. I don't feel sales like short position right now. So I feel like we're uh like although we're delivering from a bearish gap off of the 1 hour, I feel like this is
Yeah,
still
a buy model.
a buy model.
Yeah, on big time frames for sure, but if you look at the big time frame as well, you're gonna be able to easily tell that it needs to retrace, especially on the 4 hour. You're gonna be able to see that we need a red candle to
I
go down and
mean
sweep some
I
liquidity.
mean we're already like from equilibrium standpoint and premium and discount, we already uh we already gave discount, and we're
Yeah,
right now we're pushing for a long position. I don't know if it's gonna
yeah.
continue like that or
See,
if
this is the thing about the equilibrium as well. It's very discretionary because if you put the equilibrium the way you have it right now, it's gonna look like we're in a discount for a buy. But if you put it on the big time frame, if you put a different equilibrium, you're gonna see that okay, we're nowhere near equilibrium at all
yes,
on a
you
big time
you
frame
are
because we
correct.
need to retrace a lot more, you know?
You are correct, but when I try to draw my equilibrium, I try to just to draw it on the last leg. So
Yeah,
there would be like every structure has a leg, and that equilibrium will change from a leg to leg depending on which leg are you putting your FIP on. Because I can easily put
yeah,
my equilibrium from that leg up from where we are to the bottom of that move, and that would be no near equilibrium. But that's not relevant just because we already when we were like at some point, like when we were um
yeah.
on April 29th, we already delivered equilibrium. We already
Yeah, this
delivered the
is the
equilibrium,
other thing
so
that I was gonna say too. I instead of drawing an equilibrium, huge equilibrium on like hourly and 4 hour, I just did the average
yes.
of the time frame. So basically, I took something in the middle
Yep.
between small time frames and big time frames. So I picked the 15 minute, and
Yeah.
I drew an equilibrium for the last leg that was created exiting the consolidation that we had left on 15 minute on Monday 12:30 a.m. I put the equilibrium at that swing low, and I put the swing high as the high of today, the highest point that we made today.
Yeah.
If we look at that equilibrium, it shows that the 50% would be around 18,109. So we have a lot of room to go down if the idea is correct that we are gonna start retracing on big time frames from here, and then it's at least gonna reach that point, and then further as well if we end up starting to retrace deeper down to actually get closer, a little bit closer to the fib levels or the retracement equilibrium level of a time frame that's bigger like the hourly and the 4 hour. But as of right now, a good starting point would be to at least reach time frames like 5 minute and 15 minute uh equilibrium.
Yeah,
And
but
I
I
think the 15
feel
minute is not too outrageous to go for,
yeah, I feel
it's
like
relatively.
there's no like good setup for short right now. Like for a short
Hmm.
setup, in my opinion, to show a good short setup from this structure, I needed to make like an up structure, a long structure to the upside,
Yeah.
and go to sweep some sort of a buy side liquidity. Maybe that bearish fair value gap. There's a liquidity inside of it. Maybe taking this liquidity, reacting still from that bearish fair value gap, close below that 50%, so it's still respecting that 50% of the bearish fair value gap, and then from there it would give you another small, on a smaller time frame like 30 seconds, another fair value gap, an SMT, and then you can take it from there. I think I would not mind a setup like that.
Yeah, this is the tricky part. Usually on days where price action is cleaner than this, that's exactly how it's gonna play out. But on days that the price action is not so clean, it's usually not gonna give you that perfect play out the way you described it.
Yeah.
So yeah, I mean, it's a matter of time before we figure out where it's going anyways, because the longer we wait, the more information we're going to be able to collect. And obviously, the easiest piece of information that we could collect is actually a uh, n- uh, basically an inverse off of the fair value gap that actually started this downtrend. So a fair value gap up there on the 1 minute that you had drawn earlier, that's the easiest tell for you to be able to kind of see if we're still bearish or bullish. Also,
Yeah,
the
to
one that
switch
you
the
have
price.
drawn at the bottom is a good one to look at as well, because even if we go high up to sweep liquidity, we still shouldn't disrespect that fair value gap if we're going to continue down.
And as
Um,
far as far as now, it's holding pretty well.
Yeah, and actually it gave the type of rejection that I like. Might start looking on the 30 seconds for for clear confluences on very small time frame so that I can get ready for a sell if it's presented. Especially because on the 30 second you can see that there was a fair value gap above the fair value gap that we're looking at on Nasdaq. So on Nasdaq, we only have one fair value gap in that a leg that you're currently looking at.
Yeah.
On S&P, we have another one above it, and it's actually respecting the 50% of it, and it gave a
Yeah, I see
reaction
that.
down.
I see
Yeah,
that.
I want to see now the rejection block of that reaction to be respected as well on the 30 second. If not, then I'm not interested until it gives some sort of other uh confluence. And in this case, it just disrespected the the rejection block right now. So I'm still not interested in anything, not necessarily.
I think that would be a good decision to not jump in short right now because I feel like it's I don't think it's creating any good structure from a for a long setup or a short setup. It's just consolidating in a range. I'm still waiting on Top Step to send me that affiliate link, man.
They didn't send it to you yet?
No, it's taking way too long. Like I already applied for it like a week ago, like on the first, I think.
I didn't know that they had a process in the first place to issue a link. Usually for most props, it's like it's either
No, Top Step is
automatic or
different. It's different.
yeah. For most props, it's usually either automatic or very quick. Even if it's not automatic, they send you an email,
Yeah, Top Step
a couple
is
hours later or something.
Top Step. They let you a fill out a form and then they review it and then they give you the decision if they want to give you an affiliate link.
Or not.
They will set up a portal so you can track your stuff on it, and
Oh,
that's it.
gotcha. So basically, then they don't accept anybody for
They don't know.
that's. I
And
mean,
probably might the case might be just maybe because my channel is small or I won't give them really good like recognition or send them too many customers their way, and maybe something like that. I don't know.
yeah, it's annoying, but at the same time, it's kind of cool because it's exclusive. Basically, not anybody gets into it, and that's
Yeah.
yeah.
Well, I definitely understand, and I know that Top Step. So Top Step has been always one of my favorite prop firm, and it was the first future prop firm that I went to in the first place. Um, but yeah, they're tough because they've been in the business for a while, so they have a lot of uh, probably lot more employees than any other prop firm, future prop firm, by the way. And they're just doing their stuff a little slow. They take their time checking, reviewing, and all of that, and they don't need to. They basically don't need promotions. They don't need to promote their prop firm just because they're good as is. The rules,
Yeah,
everything.
that's what I think. I think too. They don't run many promotions just because of that reason. To be honest, by this, uh, I mean, by now you would think that a company that's been around 12 years, they already have a good uh history of doing business and they have a good reputation already, so that they basically don't need to, basically give out a bunch of free accounts or very cheap accounts for them to gain the business of a new trader coming into the space. They're already very well known, and anybody that trades futures knows Top Step. Anybody that trades futures probably has an account with Top Step.
Yep, I do agree with you though.
Yeah, it's basically the first stepping stone that any um any any future trader that uses props goes to. Like it's the first stepping stone, and after that, obviously, if you want to expand and have more funding, you start looking into more companies that are as reliable as Top Step. So the next one up would be, you know, my funded futures, and that's pretty much it. I think those are the main two that those are my favorite two. Everything else, it's kind of not
Wacky,
so good. Yeah, the
wacky
rules
thing.
are not great. Yeah, the rules are not great. The platform itself is not great. The reputation of the company is not great. So yeah,
And don't forget also, Upstep is the first future prop firm to come up with their own platform. And in my opinion, it's one of the best platforms ever created, comparing to Ninja Trader, Tradeovate, and even TradingView. Just because it combines all the good stuff from everywhere. You got your TradingView chart. You can annotate on it however you want. You got your a lot of people use Dome, that ladder, buy and sell ladder, and it got a free copy trader built into it, and you can buy or trade up to 3 accounts. It's really good. I really like it. It just a no brainer to me.
yeah.
So this momentum up, it's pretty good. I feel like now we should be ready to go to that high. Um, so let's just gonna price read the price action. Um, tit, 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 tit. We're breaking it on the 3 minute as well, so that is a good thing. 40 seconds to go. 216 should close above 216. 218 currently. Yeah, it needs to give a good push to the upside for this to be a long setup. And I do like this long setup. So now 220, that's a nice push. Really nice push. So it would be something like wherever that price will close at, that would be the entry point. So there, and from there that would be $15 of take profit and probably 15 of stop loss. It's kind of big because just because the fair value gap is bigger. But this should be a good, nice trade idea. We should be ready to hit that buy side and make a new high. Hmm. Whoa, 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 whoa.
If it gives an SMT diversion at the high, I'm gonna take a turtle suit
Short.
because yeah, I think the S&P wants to set up for that. Plus, I'm confident that this 4 hour candle that's currently green is not gonna remain green.
Okay. So you're setting
Yeah,
up
in
for
my
a
opinion.
short.
Yeah, I think that this whole thing is setting up for a short. But because it's not clean price action, it's kind of doing a seek and destroy first. You see how like it went down and swept sell side multiple times. The first time I swept the consolidation that you have put there, the line that you had marked out there. and then the second time it swept the sweep of that consolidation, and now it's heading up to sweep the buy side at the top. Oh, that's a clear seek and destroy for me. It reversed a couple different times now, so we haven't given a real move yet. This is a seek and destroy so far, and I think that the real move is going to be given if the S&P goes up and sweeps the high of the day, especially because there's like on the 1 minute there's literally 3 weeks right there close to each other. There's equal highs right there. The move is going to start with a sweep on S&P and a miss swing on Nasdaq, and right there we're going to start reversing.
So we currently do have an SMT on on the 1 minute.
Yeah, on the small time frames, it already gave an SMT right now. I would have liked it to give a bigger SMT on the big time frame. It might not do that, especially because with that SMT candle that you're talking about at 920, we rejected off of the rejection block of the previous swing high, and
Yeah.
it probably doesn't want to make a higher high right now. It wants to go down and make a lower low,
Okay.
lower high and lower low.
Did you see why this kind of failed? Because we already like went back to that consolidation range.
Yeah. Exactly. Yeah, that's exactly the thing that you were talking about earlier. You were like, yeah, that this might be disrespected, but
Yeah.
it doesn't necessarily mean that oh we
No.
take a buy from here because it got invalidated. No, it's not good to do that, especially when we just came out of consolidation because it's gonna go back in there and it's not gonna be very accurate when once it goes back into the consolidation area. If there's a fair value
Exactly.
gap or so, it might respect it, it might not respect it, but that's not an indicator for selling or buying because really that fair value gap could be broken and still hold like after it's broken above.
It's because it's consolidation day. So this is what you would expect. So this is exactly what I have realized after blowing so many accounts and getting
Yeah,
caught up in consolidation. This is like I stepped back from what I currently do in the moment and I analyzed what exactly I do and what the price action looks like. And this is exactly what the price action is does look like. It picks its range and then maybe break an or create an IFEG inversion fair value gap and then go back to respect to that IFEG that just inversed it. And
yeah.
and
Unfortunately, this is one of those things that, like you said, it's not the market doesn't teach you that lesson easily. You have to learn it the hard way and lose a lot of trades and a lot of accounts repeating that mistake. But yeah, this is one of those things that if you don't experience, you're really not gonna understand because uh, usually you see a fair value gap and if it's if it's relevant, uh, it should hold, right? So when is it okay for a fair value gap to be broken or inversed and still be bearish? When is it okay to do that? So that's kind of discretionary, and you start, you know, picking it up as you go, really.
yeah,
Yeah, in this case, it's
I feel like the if we're at least if we're like going up, I feel like we need to push down a little bit further, create a bearish IFEG, and then inverse it from there.
in my opinion, if at this point, if I want to be bullish, I don't want to see it create a lower low than the previous low that was left at 901 on the 1 minute candle. That's if I'm bullish. But if I'm bearish, I actually don't want the high that we left past that fair value gap at 918 on Nasdaq, 920 for S&P because there was a clear SMT diversion. I don't want that high to be broken. So if I do take a sell, ultimately I want my entry to be as close as possible to that high that because that would be the ultimate stop loss for the idea.
Yeah. So now,
Yeah.
so now that bearish IFEG that we're creating currently, If we inverse this one from down there, it would I would consider it still to be in a consolidation. I would not rate it very high probability, but it
Yeah,
might work because it's down low after sweeping a another like sell side liquidity.
yeah. In my opinion, the highest I want to probably see it go up to right now is 50% of the inverse fair value gap or balance price range that we left on the 1 minute with this structure, which is 211. If it gives us some sort of reaction right there, I can enter and have a tight stop loss above the high, which is at 225. That would put me at about $14 stop loss for this idea. And that's perfect for me because I'm covering the high, the ultimate high, where if I go above, I'm obviously gonna market structure shift and continue up. And I'm keeping my stop loss very tight. So yeah, that's the idea so far. I'm kind of struggling here on Top Step X uh, 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 website right now for some reason. It took out my component. I don't know how to get it back. You know the little thing on the side that shows you the orders?
The on my on top step.
Yeah, on Top Step X.
Okay, so you said the order, like the position when you're in an open
Y-
position.
Yeah, no, the bar where it has the lot sizes and stuff for you to enter a
Oh,
position.
okay, okay. So you're
It's
gonna
currently me just showing me the
yeah.
only the chart.
So you're gonna if you see my YouTube, if you look at my YouTube
Yeah, I
screen,
see it.
just click on add component, that icon right there. Click on
Mm-hmm.
it, and it will open this tab, and uh you can drag the order and put it somewhere. This is
Because
basically what it is. It's order.
oh, I have to drag it because I
Yes.
clicked it and it wasn't doing anything.
Yeah, you
Okay,
gotta
yeah.
drag it.
Because yeah, I it was never out on my screen in the first place for me to
Yeah.
know this, to be honest. That's the first time that I opened today and I see it not there. Okay, I'm here. Let me make sure it's put on the right thing. Micro. No, I want the mini. Where's the mini? Okay, e-mini, natural gas. Nope. Okay, there you go. Here, let me set up the number at 3. Okay, we're good. I'm ready whenever it gives something. I also want to add this second component that I had at the bottom for showing me the open positions.
Yeah, you
I'm
can do
gonna
the same
add
thing.
that as well. Yeah, I will need that one to track the open positions on the different accounts. All right, cool. Went back to normal. I have everything on there now. Thank you.
Mm-hmm.
I'm not very savvy with all these different platforms and stuff like that. I always used to just the easiest of them all was on Forex with MT5. That was it.
Buy or sell.
There's there's two buttons on MT5: buy, sell, and there's one little slot for you to put the lot size in, and that's it. And then there's another button for closing the position. if you want to close it before take profit and stop loss. But I almost never use that button. Yeah, it's gonna most likely gonna break down underneath the low sometime soon. It created some consolidation right now. You see
Yeah,
that
it
on the
did.
1 minute?
Yeah, a lot
Yeah,
of
I
equal
wanted.
lows, three of them.
Yeah, yeah, I wanted to go up and sweep the consolidation and give me a nice sell for me to start targeting lower lows. A good low to target would be uh, pre-market open pre New York session at 640. That low right there, it's good. It's at 18,150 or 151. It's exactly the distance that we need the move to be, and it's right there even before other lows that might be even lower than that. Other liquidities past that point, like the consolidations at 130, 130 would be the bottom of the consolidation, by the way. Yeah, 130, and then the point that I was telling you about, which would be the fib of the 15-minute, or not the fib, the equilibrium of the 15-minute, which is the minimum that I expected to retrace to. At least the 15-minute equilibrium, not necessarily the hourly and the 4 hour right now, but at least the 15-minute one. And yeah, earlier, like I said, the candle when it went up and disrespected, like the 4 hour candle when it went up and disrespected the small time frame fair value gap on the 1 minute, and it was green. I was convinced that this candle was gonna turn back to red and just leave a wick up there and just continue down. And it's doing that right now. It's currently red. Just wanted to go green one more time for us so that we get a good entry, and that's gonna be it. This hourly candle as well went up and made a lower low than the previous manipulation hourly candle that had a much longer wick to the upside and then flipped and rejected off of the rejection block. But this candle as well needs to reject off of the rejection block, obviously. But then the hourly candle is going to close in 27 minutes from now. So the thing is, we're probably going to get into, like, if it gives us a good sell entry, we're going to be into the trade before in like a while before this hourly candle closes, and then we expect it to obviously continue displacing down, and continue to be red um, till it closes. So yeah, once we get a nice sweep on Nasdaq, I think that's gonna be the entry. To be honest,
I mean, we have a lot of equal lows now.
yeah, we're gonna take out a bunch of them.
Got like three equal lows.
Just want to make sure that we enter where it doesn't wick us out after the entry. That's all. That's all I'm patiently waiting for. But other than that, I have no doubt right now that this LID is good.
Yeah, price action is just consolidating now. Oh man, it just keep leaving equal lows. Oh,
Now it's gonna take him.
yeah, I just took it.
To be honest, I was hoping that it wouldn't take it until we entered the actual trade. We're gonna see. So, and remember, price action is not the cleanest, so the retracement up is gonna look very weird. But yeah, not gonna be a perfect respect of anything, pretty much. But yeah, we're close to the point of entry that I'm interested in. 210. Need another like $7 or $8 to the upside. I'm still not gonna take it blindingly, and yes, I'm waiting for the type of that fair value gap, but at the same time, I'm also waiting for some sort of reaction because if we just straight displace through it, then I'm no longer interested. Obviously, I don't want it to speed up where I'm supposed to enter because that's gonna be a 4 second stop out if that happens.
Yeah, this is a good idea for a long position. Break even at this high. $9 stop loss, but again, I don't like the price action. That's why I'm just tape reading it.
Yeah, yeah. As of right now, it's not the best. We're gonna see. I just looked at your channel from the bottom next to the name. Two things. First of all, you changed the name. It looks
Yes,
like
yes.
the other thing that I just noticed that is that you hit 121 subscribers.
Yeah, that's crazy, man.
Yeah, in like very little time. Yeah,
So that would be a break even.
we're about to approach the point of interest. By the way, we re-entered the fair value gap that we inversed over and over again, the 1 minute one.
Yeah,
And then now I'm interested in the ones that we left within the balance price range, the left that we left within. That balance price range there, it's very nice because the candle that inversed the bullish fair value gap that was created at 914 was, a very strong momentum candle. It was just one candle. It didn't play in the area a lot. It didn't, you know, deliver from the bullish first and then go up and then go back down and break it. And it wasn't a slow break. It was a very strong inverse.
yeah,
And I'm interested in that, to be honest. Another sweep. Okay. Now I'm down to the 30 seconds. Um, we inversed a small 30-second fair value gap. If we inverse it again, that means that we're gonna go up higher into the fair value gap, and we're actually gonna touch my point of interest. I'm just on the smaller time frame right now, just to make sure that like it doesn't leave without us basically on this move. But in this case, it looks like it just disrespected the inverse, and it's back to being a bullish fair value gap, and we should deliver all the way up to 12 to 1150 at least with the wick, and then obviously, preferably, I would like the candle to close at 21150, where it would respect the 50% range of that balance price range that I put there. Yeah, it's very close. We need like $4 or $5 more. Don't want to rush it and get in where like I would have a worse stop loss, and that's why I'm waiting for that exact entry, but it was very close. It was at some point it was 208, so could have gotten in right there
yeah.
as well. Um, okay, let's see if the
We had
market
a
structure
small
shifts.
SMT, that's why it kind of sped up there. But we
Yeah,
also went down to respect that bullish fair value gap.
I mean, that's why I switched to the small time frame because if the move starts right there, this wouldn't be a bad sell either because the stop loss would be above the 30-second swing high, left at 208, and that would be, I mean, very, very, very close to our entry. It's like $9 of stop loss or something. But as of right now, it doesn't look like it wants to start the selling yet. It did speed up just a little bit, but it doesn't look like a strong reaction. It kind of does right now. To be honest, the S&P is continuing to make lower lows. If the S&P makes one more lower low, then I would consider entering early somewhere that has confluence. In this case, it just gave another S&P right there, and I think that the next candle is gonna speed up very quick. So, I think we're gonna be entering very, very soon in a couple seconds, actually. I'm waiting to see this fair value gap get retraced to and see the reaction off of it. We're currently inside of a 30-second bearish fair value gap. We're now above it. That's exactly what I was talking about. That's why I didn't want to rush an entry until actually seeing the tap up there. If we do disrespect this, I will look into the rejection blocks as well because it did reject the first time and maybe it's not gonna sweep that high. I would like to see it sweep that high and go wick into my point of interest. That would be super nice. The stop loss would be tight, very tight on that. I like my stop losses um, to be that tight. Okay, the Nasdaq just swept another SMT diversion because the S&P was forming a lower high right there, and the Nasdaq just swept the 208 point that we were discussing. Think it's gonna approach my point of interest now, and the best thing about this is that it's actually gonna leave an SMT diversion inside of my point of interest, which is like the best type of entry that I usually look for, you know?
Yeah.
It just filled a void on the 30 seconds right there on the left hand side.
Mm-hmm.
And yeah, that might be the start of it right now. We're gonna see for a couple more seconds. It would be nice if it tapped exactly the point that I said it needs to tap, because at that point I wouldn't use any discretion. Just as soon as it taps it at this point with the SMT diversion given and everything given, it taps, I'm in. So yeah, uh, there you go. The speed up to it. It tapped the 209.50. S&P is still moving lower than the Nasdaq. You see that?
Yeah, I do.
It's keeping the SMT diversion, and boom, it just entered my confluence right there. I'm waiting for a reaction. Oh, it tapped perfectly to 1150 and it gave a perfect reaction. That's awesome. Now, I see where 30-second closes. There's going to be a power of three on the next wick.
Yeah, let me know whenever you jump in.
Yeah, I'm about to. Go ahead. And if you want to draw out the idea. Okay, good, good. I hope that it didn't give us a terrible feel on that, to be honest,
Did you jump
because.
in?
Hmm.
Oh, okay.
Oh yeah, I meant on that candle right there, 9:43, 30 seconds.
Okay.
You still good if you're testing the idea, and it's super early into the bear run if the idea is correct, obviously. If the idea it's not correct, the stop loss is going to be super tight anyways. It should be at the rejection block high on let's see, what number is that? Okay, this is covering let me see. Okay,
22?
221.
21.
221, the rejection block right there. From your fill, that should be like $13.
Okay.
But how much is your fill though? That's the thing.
Mm, it is 205, which is not terrible. It's kind of a bit late, but it's fine.
No, it's not terrible because if the idea is correct, that's just a start. We got in super early. I mean, even for me, I kind of, I waited for a little bit too long. I should have clicked right there when it got into 211. But it filled me at, let's see, 208.50 cents. So not even that bad, and the stop loss is very tight on that. So either way, if it's wrong, we should be able to exit this trade relatively quick.
Yeah.
SMT diversion, it's still holding on the S&P, although the Nasdaq is still playing in that fair value gap.
Yeah,
So I'm
yeah,
not
yeah.
afraid of that,
No, it's
just because
creating
of,
just another SMT.
yeah, just
But
because it's creating another SMT.
yeah,
I'm not afraid of
but
that really.
what I don't like is it's creating SMT on the in Nasdaq.
I think it's not that worrisome. It's not looking the best right now, but this is the thing, we're still within the balanced price range that we were talking about. So as long as it starts reacting off of here and going down, I'm not worried about it. In this case, it just with that wick that we're of the candle of the 1 minute candle that we're currently in, like the top wick of it, it's respecting the 50% range of the actual bearish fair value gap as well. So it should be fine. And like I said, the fill wasn't horrible at all. That's a three handle difference. That's nothing because the stop loss on this idea was less than $15 either way. So even with the additional three handles to get into the trade, I mean, stop loss is still super tight. The whole idea on three minis, for example, I'm currently taking it on three minis. The whole idea is costing me $930 to cover the high. If I cover the rejection block, is only 780. If I cover a little bit above the first wick above the rejection block, it's like at 870. Currently, I have it sitting at $900 exactly. So it's almost at the high of that previous swing that we had left. And just hope that if the idea is correct, that it's not one of those type of trades that goes all the way up to the rejection block to actually start going down, because that would be super annoying. But other than that, I'm still covered above the rejection high, so should be fine. I would recommend you to have it above the rejection high as well. It would put you at a risk of like 970 or 980, but it's still within the regular amount of stop loss, because anyways we use anywhere from, usually when we take an idea together, it's like anywhere from 15 to $18, and it's still gonna be fine.
Yeah, I feel
It
like
averages
yeah.
it averages out. Sometimes the idea is like $11, sometimes it's 18, so it averages out to $15. I don't care exactly on each singular trade how much the stop loss is, as long as they average out to that much. But I'm not gonna have a trade idea where like my stop loss is $25. If my stop loss is $25, that means that I didn't really get into the beginning of the move, right? That means that I probably FOMOed in, and I'm having a stop that has to cover the high of that uh, sell, or the low of that buy, and because the fill is terrible, the stop loss is going to be terrible as well. But in this case, we're good. I'm still looking at the fair value gap holding. It might actually fill it all the way to the top. Mm, that's the nastiness of having bad price action, to be honest. But other than that, even if it fills it at the top and starts reacting, we should be fine. If it heads to the high, then obviously the idea is wrong, and at that point, yeah, then sell is not good, buy is not good as well. It keeps stop hunting up and down. And yeah, I would call it a day if it does that.
Whoa, moving too fast there. Ooh, yeah, it just took me out.
Sure. I believe I'm, yeah, I'm out right now as well. I got out. not the candle where you said you got stopped out, the candle after, because I was at the high. Let's see. The order was nine. It filled me at 908 of a stop loss, so not super bad, but still not clean price action. I wouldn't look at it again for the rest of the day, to be honest.
Yeah, I don't like it. Yeah, I
Yeah,
don't like it.
it's bad. Yeah, not the greatest, not the greatest price action for sure. The trade looked super good, to be honest. They had a lot of confluences going into it, and especially because it gave an SMT diversion right there at the entry as well. But then it ended up taking out the SMT diversion, it evened out the highs on both S&P and Nasdaq. So yeah, like I said, this could very well be a seek and destroy because that was the highest point it should have went up to if it wanted to continue selling down. And yeah, it's it is what it is.
It is what it is.
Yeah. I'm trying to analyze now the chart and see how I could have avoided this loss. And the only thing the only answer that I'm currently seeing on the chart is to avoid the day as a whole because there was no other entry that made sense. It was the only thing that made sense. And when it's like that and the only thing that makes sense gets stopped out, that probably means that it's a low probability day, you know. That's a hint to the fact that, you know, maybe we shouldn't take anything today. And that's why I was saying that, yeah, I wouldn't, I would take read it a little bit. Yes, I would want to see where it ends up going, the price, to get some free information for whenever we take another trade. But uh, all in all, I would say that this is not a good day to trade,
No,
to
it's
be
not.
honest. Nope, it it, it rejected us completely. And yeah, the funniest part about this is because if this is the seek and destroy day, and if this is due to the price action being bad and not the actual trade being wrong or the direction of the market being wrong, we're gonna see it go down after it swept our entry. And this is the most annoying part.
It
That's the
is.
thing right there. It liquidates you or liquidates on seek and destroy days. It liquidates at the places that usually would make sense to not be taken out, and then it continues into that direction once it liquidates the traders that entered the move that on high probability days should be the correct move. So I wouldn't be surprised if we start seeing it displacing down now after it took us out because, like I said, with a seek and destroy day, that's to be expected. But then obviously, if the idea is completely wrong, but we're gonna see it play out and we're gonna understand, okay, why it started buying instead of selling. But in this case, I think that it might very well continue down. It just wants to destroy first. And in this case, it accomplished the mission. It did destroy us, right?
Yeah, I feel like since we're like so high in premium now, I think we should hit Hive Day.
And this is the funny part about it. It might not even do that because for someone that took the opposite, you have to think about it this way too. If it's a seek and destroy day, for someone that took the exact opposite trade, opposite to the one that we took, that took a buy, which liquidity makes the most amount of sense to have a take profit on? That high of day, right? And for that reason, it might come short. But yeah, the as of right now, the big picture, it looks like the idea is going to be disproved. It's going to be wrong because we're approaching the 10 o'clock mark, and the hourly candle is currently above the rejection block that we first respected. So for that reason, the actual idea as a whole might turn out to be wrong.
Okay. Dang it. I missed that one. Oh man.
Missed what?
Missed that trade. I wanted to get on it, but the candle moved so fast.
Get on one.
It was a long position to the high of day
From where exactly?
after inversing the bearish on the very top. Anyways, I think I'm gonna end the stream here because I gotta go run do something really quick. Uh, price action was not that great for that session, so I'm just gonna go ahead and end the stream here.